So let me get into problem number 9. This is in page number 107, continuation only. From the following information, prepare balance sheet for the year ending 31st March 2018 as per Schedule 3 of Companies Act of 2013. They may ask as per schedule, they may not ask. They may just say prepare balance sheet. Then also you have to do the same format. No other format is prescribed for second PUC. Whichever I am doing here, that is the prescribed format. So here in this problem, all items belong to balance sheet only. No income statement items are there. So no need to prepare an income statement. So let me go on here. First one, inventory. Only thing is you have to remember whether it is an asset or liability, you have to work it in your mind. Or if you have a hard copy, you can write as asset A, liability L. So that easily you can work it on when you're working in the paper. So inventory is an asset, equity share capital liability, plant and machinery asset, preference share capital liability, general reserve liability. This comes under reserves and surplus, creditors liability, provision for taxation liability, that is a tax payable to government. For that, a money will be kept aside at the end of financial year. That money kept aside is called provision for taxation. So it is a liability. Land and building, tangible asset, cash at bank asset, 12% debenture is a liability. So let me get into the working part of it. Page 107, problem number 9. In the books of the company, 31st March 2018. So I have the pro forma with me. I have a few notes over here. Whichever is required, I will prepare so that easily you can understand when you are working. So wherever required, you can prepare. Usually, if it is more than one item, prepare a note in the exam. If it is only one item, straight away take it to the balance sheet. But you may asking, sir, why you are doing note? I am doing note to make you understand. Okay. And if it is more than one, always note is preferred. Only one amount, note is not required. So please remember this rule. So first one, inventory. Inventory is a current asset. So you have here inventory in the current asset. So straight away you can write it over there. $7 lakhs. Next, equity share capital. And also we have preference share capital. You can see in the previous problem we have done it. Two capitals are therein. So we have to go for preparing a note for this. So note number 1, share capital. Under that, equity share capital, 16 lakhs. Preference share capital, 6 lakhs. So here, because there were two items, I have taken into a note number 1. Next is plant and machinery, 8 lakhs. And we have one more fixed asset here, land and building, 26 lakhs. You can see down from the last, okay, land and building. So 2 items are there. So I'll go for preparing tangible assets under fixed assets, tangible. Remember, plant and machinery, 8 lakhs. Land and building, 26 lakhs. So we can write other time also. You can check it out and write, not a problem. So I'm done with inventory. Equity capital is done. Plant and machinery is done. Preference capital is done. I'll go for next one. General reserve. So general reserve, I can take straight away under reserves and surplus, but I'll take a note for you to make you remember item comes under which one. So I made a note number 3, general reserve. Six lakhs. This is only to make you remember this item comes under which one. Okay. Even though one item is there. So I am taking a note for that. Okay. Next, creditors, only one amount is a current liability. That is trade payable. I have done up to general reserve, 6 lakhs I have taken. I was talking about creditors. Creditors is a liability. It's a current liability. So it comes under trade payable. Remember? Creditors amount 3,50,000. Then next one is provision for taxation. Provision for taxation is also a liability. It comes under short-term provisions. So I'm doing, even though one amount is there, I'm doing the preparation of a note to make you understand. Next, land and building, 26 lakhs already taken. Next is cash at bank. Cash at bank, we can take straight away here. Cash and cash equivalent, I will take there only straight away. Five lakhs. Then left with only one, 12% debenture, 12 lakhs. So 12% debentures is long-term. Liability. One single amount. So we have taken all the amounts over here. No item is left here. So then once you're ensured that, we can go for totaling. So when you go for totaling, first one, note number 1, 16 lakhs plus 6 lakhs, 22 lakhs. Then plant and machinery and land and building, 8 lakhs and 26 lakhs, 34 lakhs. General reserve, 6 lakhs. Trade payable, 3,50,000. Provision for taxation, 2,50,000. 12% debentures, 12 lakhs. So I completed all the notes totaling. Let me get into now the totals. So 22 lakhs share capital, then tangible assets under fixed assets. Next, general reserve comes under reserves and surplus. It comes under reserves and surplus. Then creditors comes under trade payable, current liability. Next, provision for tax, short-term provision again under current liability. Next, debentures comes under long-term borrowings. So I have taken all the amounts therein. So we can go for totaling now. Both assets and liabilities should be equal. As you can see here, we have to add all these things. 5 items are there. 22 lakhs, 6 lakhs, 12 lakhs, 3.5, 2.5. It comes to 46 lakhs. Similarly, assets, 3 amounts are there. 34 lakhs, 7 lakhs, and 5 lakhs. That also comes to 46 lakhs.